Could home prices actually drop in 2026? I'm Brian Jahanbin, a mortgage broker and real estate financing expert with over 20 years of experience. And today I want to talk about something I think every homebuyer and real estate investor needs to understand. We may actually have two very different housing markets happening at the same time, the lower and middle income market and the luxury market. Let me explain. The biggest problem we're seeing right now is affordability. Mortgage rates are much higher than they were during the pandemic, while home prices, property taxes, insurance, and other housing costs have also increased. And remember, buyers don't just look at the price of the house. They look at the monthly payment. If that monthly payment becomes too expensive, buyers have a few choices. They can wait, buy a less expensive property, move to a more affordable area, or simply stay out of the market. This is where I believe some lower-priced and middle-market homes could experience more pressure. These buyers are generally more dependent on financing and more sensitive to mortgage rates. So if rates stay high, affordability remains stretched or the economy weakens. We could see more sellers reducing prices, but a price decline doesn't necessarily mean we're going to see a housing crash. It could look more like sellers offering closing cost credits, paying for a rate buy-down, or reducing the asking price. Now let's talk about luxury real estate. The luxury market can be very different. Someone buying a $3, $5, or $10 million home may have significantly more income and assets. They may have a large investment portfolio, business income, or even enough cash to purchase without a mortgage. So when mortgage rates move higher, it doesn't necessarily stop these buyers from purchasing. That's one reason the luxury market can perform better. But don't misunderstand me. Luxury real estate is not immune to a downturn. There are fewer buyers for a $5 million property than there are for a $500,000 property. So if wealthy buyers pull back, luxury homes can sit on the market much longer. And that's why I don't like when people say home prices are going to crash nationwide. My question is, which homes, which city, which neighborhood, and what price range? A $500,000 home in one market can behave completely differently from a $5 million home in another. Even within the same city, you can have one neighborhood where homes are selling immediately and another where sellers are cutting prices. So if you're thinking about buying or investing in 2026, don't just look at the national housing market. Look at your local inventory. Look at how many homes are receiving price reductions. Look at days on market, employment, and migration in your area. And most importantly, look at affordability. Because I believe we could see a housing market where some segments remain strong while other segments experience price pressure. The lower and middle income market may be more vulnerable because buyers are much more sensitive to monthly payments and mortgage rates. The luxury market may have more support because those buyers typically have more income, more assets, and sometimes don't need financing. But again, luxury is not bulletproof. So the biggest question isn't, are home prices going up or down? The better question is, which market, which neighborhood, and which price range? Because in 2026, we may not have one housing market. We may have several different housing markets moving in completely different directions. I'm Brian Jahanbin with Maxim Lending. If you want me to break down what's happening in your specific market, comment below with your city, and I'll cover it in another video. Don't forget to like this video, subscribe to Home Loan Secrets with Brian Jahanbin, and I'll see you in the next one.